What's up, guys? Stas here. So another crazy day in the stock market so far, with the S&P 500 up 47 points, roughly 1.5% in the green. The Dow Jones up 425 points, 1.65% up. And the Nasdaq's up 125 points, 1.25% up, followed by the Russell 2000 completely stealing the show yet again, up over 2%, roughly $30 in the green. And in this video, we're going to talk more about the markets like we always do, breaking down some technicals and going over what moved the market today. We're going to talk about some retail sales numbers as well as a couple of notes and some key points from Jerome Powell's first day of testimony here. And as always, I'm going to be going over what I'm looking to buy right now in the stock market. What am I personally doing with my money as of right now? So if you guys find value in this video, as always, hit that like button for me. Consider subscribing to the channel and check out all the free links down below in the description box if you want to be further connected with the Strive Smart group chat, Discord chat, Facebook group. All of those are free, and you can also get 2 free stocks from Webull valued up to $1,400. That's also linked down below in the description box. So let's get into the video, guys. And right now, first and foremost, there's 42 minutes left in the market. So between now and 4 p.m. Eastern Standard, anything can happen, especially with how volatile the market has been. But as of right now, it's up 45 points, the S&P up about 1.45%. So let's go over a couple of technical points here that I'm looking at and why I'm thinking, and not just because I'm thinking it, because the technicals are telling me, why I'm seeing how the bulls are getting back in charge here. So we can see overall on the 4-hour chart, the uptrend is continuing, right? We have this channel drawn out here, perfectly parallel channel. We drew this one out yesterday, and with today's price action, it's still in the channel, right? So that's good for the overall uptrend here on the S&P 500. So if we jump in a bit further, and by further I mean, let's take a look at some smaller time frames here, starting off with the 20-day chart. You guys can see we also broke above 3060, and you guys know the level between 3060 and 3080 is a very important level for the S&P, right? Because it was an old resistance. Now that we broke out of it, it has become a new support. So for the bulls to continue the momentum, to continue the rally, it's 100% imperative that the S&P holds 3060. So the fact that 3060 to 3080, right? So the fact that we're seeing on the 5-day, 5-minute, okay, this gives you a better look at it. You guys can see over the past couple of days, we double topped at around 3080. 3060, right? So the fact that we actually pulled down on the S&P today, we tested exactly at 3080, we held it, and we popped up, that's a good sign for the bulls. But again, between now and 4 p.m., 40 more minutes, anything could happen in the market, and it seems like we might go back down to actually retest 3080 yet again. So keep an eye on that point, guys. If we pull down and we test this, it is very imperative that the bulls hold here in order for the momentum to continue, right? And notice, right at 3080, right at around 3060, that 20-point range, we're going to be right at that 180 SMA also on this 5-day, 5-minute chart, which has been a support as well over these past 2 days in the markets, right? So keep an eye on those points for the S&P 500, but overall, as of right now, the bulls do seem like they're in charge, right? And most of the game, if not all of it, right? All of it, honestly, came from the gap up overnight, right? We can see the markets, S&P that is, closed at around 3066 yesterday. We gapped up about 90 points up to about 3150. That's a move of about 3%. And from there, we've been seeing a bit of, downside. Not that we're completely going into a downtrend, but we're cooling off a bit. And that's normal, right? When you see the markets gap up 3% pre-market, it's not likely that they're going to continue pushing up from there. It happens, sure, it does happen, but more often than not, after it gaps up a bit, it cools off a bit, right? And maybe some bears come in and play that cool off before it either rallies back up, right? It's the same thing when the markets drop. A lot of the time when the markets gap down 3%, a lot of the time we see a rally back up, kind of a relief rally where the bulls come in and play that before it potentially starts falling down again. So that's kind of why we're seeing a bit of a drop here. It's not alarming in my personal opinion, looking at it from a bullish perspective, because again, we're holding the trend here. But again, keep an eye on 30.80, and another big one here, another big level is going to be 31.20. Notice how 31.20 was a resistance back in the beginning of June. If we pull back a bit to the yearly chart, you guys can see 31.20 was a resistance back towards the beginning of March, right? And it was a support back in November, heading into this new year in 2020, right? So another level for the bulls to close above today, which would be great for the bulls, would be 31.20, right? If we did something like this heading into the close, not that dramatically up to 3,200, but if we rallied up to, let's say, 31.30, 31.40, and heck, if we push to the highs of, earlier in the day, and not even today, even if we do this tomorrow, that's going to be very good for the bulls, right? And when we're breaking down the Dow Jones, again, up 430 points right now, up about 1.7% with 40, or actually about 35 at this point, minutes left in the market. We can see the Dow held a very good critical level today, and it actually broke out of it at about 25,800 to 26,000. So that's good for the bulls, right? Overall, we're holding the uptrend. We're breaking out of a resistance zone, 25,800, 26,000. Now we're looking to fill the gap up to 27K. And let me take a look. Did we get close to that level earlier? We got about half the way up that range. We got to about 26,500. So that's good, right? We opened up that big gap of about 600, 700, 800 points from yesterday's close to the open. Now we're dropping back off, and we're going down to test 25.9, 26K, which again is where we double topped over the past couple of days. So if the bulls end up holding that level, 26,000, heading into tomorrow and rallying back up to test the mid 26,000s, that's going to be very good for the bulls. And at that point, we might be going back up to 27,000, mid 27,000, guys, as is indicated by this chart here. And overall, the upwards price target, let's say if we did hit a higher high on the Dow Jones, we took out 27.6, I'm looking at 28,000 as the price target here. And when we're taking a look at the Nasdaq, guys, Nasdaq broke out of 9,700, 9,600, actually more like 9,750. That was generally an old all-time high, so that's a very good sign here for the Nasdaq over today's session. And I believe we did break it a bit yesterday, or we tried to. We did break out of 97.50 yesterday. So yesterday's close for the Nasdaq and the momentum heading into today, that's very, very good. And overall, the support that I'm looking at here, if we do pull down, and it seems like we are pulling down heading into the close here with 30 minutes left, I'm looking at 9,800, right? 9,800 is a point where, okay, the bulls need to hold for the Nasdaq to continue the rally and maybe for it to go back to 10K, right? And you guys know that I like trading leveraged ETFs, simply day trading them. I don't swing trade them, but I like jumping in and out of those for, during volatility. And one that I'm looking at here that trades, based on the NASDAQ is TQQQ, right? So if we do get that pull down on the NASDAQ, going back to that NDX, right? If we do go to 9,800, TQQQ, which goes up whenever the NASDAQ goes up at a 3x rate, that could be a dip buy maybe from 89 to 90 bucks, and we could ride it up again as a day trade, right? As a day trade, do not hold these overnight, guys, but we could ride it up for a pretty nice gain there. So overall, guys, the markets ran pretty well today. And why did they do this? Almost forgot. The economy numbers we got today, not the economy numbers, the retail sales numbers that we got today were pretty solid, right? Retail sales rose 17.7% in May versus 8.4% expected from economists. So pretty much we blew out expectations from the economists here. And the total, let's take a look at this. Total sales include purchases in stores and online as well as money spent at bars and restaurants, right? There's a lot of categories here, guys. Go on the Chamber of Commerce's website. They have a whole little document there that goes into the nitty-gritty of the numbers. I was looking at that before, right? I recommend you guys go look at that to see exactly what categories are doing what and how they're changing year over year. But overall, the numbers include, again, online sales, bars, restaurants, and a lot more things. And in April, we saw a 14.7% drop, right? The largest monthly decline in nearly 3 decades of record keeping. And in March, we saw an 8.3% decline. So we went from 8.3% once the crisis started kicking in pretty heavy here in the U.S. Then we went to 14.7%. Then all of a sudden, as the economy's been opening around over the past month in May, now we're seeing a big jump of, again, 17.7%. But overall, we know this. These categories, most of these retail categories, they have a long, long way to go before full recovery. And that's exactly what Jerome Powell has been saying, right, the Fed chairman. And I'll also link down below the testimony for Jerome Powell. It's a pretty long video. I recommend you guys go check it out to kind of see where his head's at and kind of where the market, not the market, but the economy in general is moving and how it's going to recover in his mind over the next couple of years. I really recommend you go checking that out. But to go over a couple of points here and to kind of go over how the economy is impacting different people, which is quite interesting in my personal opinion, is here we go. Levels of output and employment remain far below their pre-pandemic levels. We understand that, right? And significant uncertainty remains about the timing and strength of the recovery. And this has been the kind of what he's been saying, right? We know zero interest rates are here to help the economy. They're here to stay through 2022. And they're going to be doing whatever it takes, the Federal Reserve. They're going to use their tools to the fullest of their extent. This has been like a broken record over the past couple of weeks. We all know that at this point. At least most of us know that at this point, right? And the sad thing here, guys, is, yeah, the markets are going up. And we've heard this before, the rich gets richer, the poor gets poorer. Markets are going up. So if you own assets, that's good. But a very sad reality is low-income households have experienced by far, and this is not my words, guys, these are Powell's words, right? Again, if you guys go watch that link down below, it's a pretty long video. There's a lot of Q&A as well. It shows you a lot, right? Low-income households have experienced by far the sharpest drop in employment, while job losses of African Americans, Hispanics, and women have been greater than that of other groups. If not contained and reversed, the downturn could further widen gaps in economic well-being that the long expansion, that means the economic expansion, the bull run, had made some progress in closing. Powell also told, that goes again into what I said before. But either way, guys, there's a lot that went on in that meeting. And those are some just key quotes there that I thought were pretty, that stood out to me at the end of the day, right? And there's a lot more we could talk about, but it just goes deeper into how, overall, the wealth inequality, the gap here has only gotten worse. As the Fed keeps buying these corporate bonds, it keeps flooding money into the economy, it's pushing up asset prices, right? Which makes the rich richer. But again, with these jobs being lost, and a lot of these jobs are gone forever, a lot of these lower income people, they're kind of kicked to the side. Not that they're kicked to the side because they are being benefited with all of the stimulus and so forth, but at the end of the day, they're hurting a lot more than the average person, which it's sad. It's a sad reality that we're living in, but I'd love to know down below in the comments, as always, what are your thoughts on that? Those are just a couple points that I thought were interesting, and again, the full video is linked down below in the description box. So overall, that's kind of it for the market update, some points from the meeting there, and just in general, what moved the stock market up today. And as for what I personally did, guys, I didn't do much in the markets today. I actually only picked up some shares of NEO here on the dip. We actually popped up to $7.50 on NEO stock today pre-market. And you guys know, especially those that have been following the channel, NEO has been one of the hottest performing stocks in the markets, right? It's gone from $5.50 on the 11th of June, and now on what? The 15th, 16th of June, it hit $7.50. And this is because of a lot of things, right? You know, mainly a lot of buy ratings from different analysts. We've been breaking out of resistance after resistance, a lot of volume on the stock, a lot of bullish momentum on the stock. And you guys, again, that have been following, you guys know I've had a lot of wins with NEO. I made 12% last week. Yesterday, I locked in a trade on NEO where I made about 8% on swings that I held over, shares that I held over the weekend. And honestly, with today's pop to 750, we hit a higher high, right? With all the volume still there. And if you guys go to times and sales and break this down for yourselves, you see a lot of buying coming into the stock. This could end up being another dip buy, right? Higher high, the pull down at about 660, 650 it actually went down to. That's an opening of about 12%. And it seems like heading into the close, we are actually holding this point. And all I want to see now is a full break out of the moving averages before I actually add more money. But overall, I actually ended up buying two separate positions in NEO here with goals of swinging them for a couple of days at least, right? So where did I buy? I actually bought in at 667 initially after this first big drop down to 652. I actually bought a little on the upswing back here. And I actually bought a little bit more at 674 as we pull down the second time here. So at this point, my average is right around, I'd say 670. So literally at this point in time when I'm filming the video, I'm break even on the stock. As the stock is about 670, it's creeping up a bit. So I actually am about 2-3 cents in the green as of now, and we're breaking the moving averages, the moving average resistance as we speak. So NEO could literally be setting up for a rally into the close here, which again, that would be fantastic for me and anybody that ended up buying here on the dip. But overall, guys, that's all that I ended up doing today. I picked up some NEO on the dip here. Overall, I think it is a dip buy, but as always, you guys watching, I know many people watch my videos now. Don't buy just because I'm buying. Always do your own research. Always do your own due diligence, and simply do not buy based on others' opinions, whether it's me, the guy you see on CNBC, Warren Buffett, whoever. Don't do anything based on others. If you have not done the research yourself, just stay out of it completely, right? So let me know down below in the comments, what are you guys doing in the markets right now? Where is your head at as these markets are continuing to rally up? And now let's get into what I'm looking at, some other stocks that I'm looking at to get some of this cash working. Because again, you guys know, although I am playing offense, I am making money, putting money to work in the markets. I also have a lot waiting on the sidelines. I have a lot of cash as we are in a more volatile spot right now with the Fed doing whatever it's doing, everything that it's doing, with the economy where it's at. We're finally getting some volatility, so I'm being a bit more cautious, but again, I still want to get some cash working. So the first stock here that I'm looking at is the Electronic Arts, ticker symbol EA. And quite honestly, guys, this is one that we've been watching for a couple weeks now. I actually called this one out back in, early, it must have been early to mid-May, right? We were talking about how there's a clear resistance at 120. We're in a wedge, or we were in a wedge at that point, squeezing at this point between, 120 and 117. And I said, if we break 120, guys, it's likely that this thing sees a massive squeeze up, price target around 130, as you guys can see here on the 3-year chart. And even above 130, if we break 130, this could be a runner up to the mid 130s, 140s, and heck, even the 150s. But let's not get carried away because we're still under 130 bucks. So at this point, we could end up, if we see a pull down, which I'm hoping for, we're already seeing it, right? We could end up pulling down a 124, maybe 122, 123, and end up getting this on a dip, right? And we can already see the uptrend is intact, even on this hourly chart, right? We can see uptrends intact. We pulled up for the higher high today at 127. Now I'm looking to buy in on this weakness. That's simple, right? Looking to buy in again between 122 and 125. And probably I'm looking to do this tomorrow. Not doing anything over these next 25 minutes. I'm pretty much done for the day at this point. But if we get that weakness, I could pick up some shares. And the goal is I'm going to ride it back up to $130. That's the overall price target that I do have here. And it opens up, or that window of profit opened up, is around 4 to 5% from about 123 to 130. And again, there's even more if we break 130. There's even more potential, right? So the next stock I want to go over today with you all is Square. I know I've mentioned Square a lot on this channel, but the reason why I keep mentioning it is because it keeps doing well, right? We pulled down 92 bucks was tested yesterday, or actually we broke 92 yesterday, which was good. We actually pulled down and we tested the low 80s, which is exactly what the bulls wanted to see. The bulls wanted to see a pull down into the low 80s and a hold there and a continuation of the rally. And again, that's exactly what the bulls got. As you guys can see, we hit a higher low there at 82 to 85 bucks and we popped up. And at this point, you know, the move has been made. Not going to lie. The move has been made when it comes to Square, but that doesn't mean that the move is done. It does not mean that the move is done, but I actually do want to see a pull down in Square before I end up re-entering, right? And a likely area we might pull down to is right around this point right here, 92 to about 92.50. That's where I'd be a buyer of this stock, ultimately with a price target of about $100. Going back to that 3-year chart, you guys can see we were actually at $100 about 1.5 years ago at this point, back in October of 2018, before the Fed tried to, you know what the Fed did back then. It started to try and tighten up the policy a bit, and the markets dropped 20%, just like that, right? When the Fed's trying to increase rates and try to tighten the monetary policy, or do some quantitative tightening, the market does not like that, which is why, again, the rates are going to stay at zero through 2022, which at the end of the day, guys, although the economy is not doing too great, that's good for the stock market at the end of the day. It's good for asset prices when interest rates are at zero and close to zero. The lower, the better, right? Let's just put it that way. So Square from 92 to 100, that's kind of where I'm looking at it. And maybe even from 95 to 100, if we don't even pull down tomorrow, that could be an opportunity. And 2 healthcare stocks, guys. I don't really talk much about healthcare stocks here on the channel because, quite honestly, they're boring. But they're great. I think they're great for long-term holds, and especially this one right here, Johnson & Johnson, ticker symbol J&J. And you guys can see the downwards channel that Johnson & Johnson has been in. And this is a stock that rallied pretty quickly as the economy recovered. You guys can see it went from about $110 at the lows at about the end of March here, and it rallied all the way back up to 157 in just 1 month, right? This rallied very quickly, and ever since the end of April, J&J's been a dead stock. It's gone from 157 down to about 140, and that's kind of been the story over the past 2 months. It's been a dead, boring stock. And typically, I don't trade setups like this where we're downtrending and we're bouncing within the downtrending range, but I'm not going to lie. I do like the way this is looking, right? We held 140. Now we're trading in the middle of this range, so there's not as much potential as there was, let's say, if you took the flyer trade at 140, right? But we're still showing momentum that could get us to 148. So it's worth watching. Let's say we get in at about 143, 144. Up to that top of the channel is 3% profit, up to about 148 bucks. And the goal here is, guys, that Johnson & Johnson, or it would be that Johnson & Johnson actually breaks out of 148. It breaks out of the downwards channel here. And get this, 148 is actually a big resistance from back in December as well. It's not just because we're in this channel that it's a resistance. We're also at a moving average or resistance from a couple months ago. So either way, 148 is a very big level. So if we break that for the stock, watch out for the 150s. I'm thinking we're going right back to the 150s, quite honestly. And ABBV is another healthcare stock here. Ticker symbol ABBV that I'm watching. And quite honestly, out of some dividend stocks, in the market right now, I'm very bullish on ABBV. This is one that I've actually been buying a decent amount of as of late in my long-term accounts, in my M1 account that you guys can see. I have a playlist here on the channel, as well as in my Roth IRA. And they got some good news regarding their Humira patent. It's extended through 2023, which means that a lot more money is coming to the company, because you guys know healthcare companies, the way that they make money is by patenting a drug and then increasing that price so nobody can compete. Because if you have a patent, nobody can make that same drug. So they can really outprice, everybody and just make ridiculous amount of money. Not even outprice anybody, because there's no one to outprice, but they can just make the price high. And then once the patent runs out, that's when a lot of generic drug makers come in, and that's when they have to drop the price of the drug, because no one's going to buy it. Well, people will still buy it, but not as many people will opt in for the more expensive one that ABBV has, because another company's going to have one that's a third of the price or whatever, right? So as long as Humira has that patent, there's going to be a lot of potential here with ABBV. A lot more money is going to be coming into the company, and that's good. And at this point, we're seeing a $95 break. That's a good sign when we're looking at technicals, right? We pulled down, we held 90 at a higher low. That's also good for the bulls here on the 4-hour chart. So ultimately, I'm thinking this stock's going over $100. I'm going to be quite honest with you guys. That is where I think it's going. I have my money where my mouth is. Literally, like I said, I've been buying ABBV, and they also have a pretty sweet dividend. I forgot to mention, about 5%. And I also go deeper into ABBV, as well as one more dividend stock I'm buying right now, and I'll link that video down below in the description box. And another reason why ABBV's been bullish is a lot of analysts are increasing their targets. I think I saw a buy rating and a $115 price target on ABBV. And mind you guys, ABBV was a stock that was over $100 about 2 years ago. It rallied all the way to $125. So if we break 95, $100, this could end up rallying up to the mid-hundreds. You guys can see the first price target here is 107, and then followed by that, we might hit that 115 to $120 level. So that's ABBV, ABBV there. And another couple here, two oil energy stocks here. One is BP, and another one is going to be XOM. And these two, they're a bit more volatile, a bit more risky, I'd say. But overall, they're both worth watching, as they've both got crushed over the past couple of days. Me as a swing trader, guys, I look for setups, and I look for stocks that, A, they have bullish momentum, of course, because if I'm swing trading a stock, I need to see the stock going up over a specified period of time. But I also want to see a pull down in the stock that makes it worth me getting into. Why would I want to get into a stock that's, let's say if I were looking at BP, why would I want to get into BP when it was at 27? At that point, it was very overextended. So I want to get into a stock that's pulling down and that has momentum, right? And both of those factors are in BP and XOM, right? So I'm simply watching and looking to see if BP ends up holding 24.25. It seems like it is, guys. Quite honestly, we rallied up to about, what was it, like $26 almost pre-market today, which is a good sign. So just watch out. For me, guys, I'd probably get into BP after we break $26. So I'm going to set a target right there. And if we break $26, I'm thinking BP has a good shot at getting back and taking out those highs, maybe at $28.80 to about $29. And mind you guys, these energy oil stocks, they've been hit so much. They've been slaughtered. You know, this has gone from 40 to 15. So, you know, the price appreciation, the potential is there. And again, the oil industry is one that's been disrupted. There's a lot of problems here, right? So be careful, do your own research as always, but despite the oil industry being affected, the stock could run either way, right? We've seen that before. The stock could get hot either way, so I'm watching that, and it's pretty much the same setup here for XOM. We rallied up to about $50 pre-market, which is good. We pulled down now to about 48. We're holding the uptrend, this little mini uptrend that we have over the past 2 days of trading. Ultimately, the 4-hour uptrend is also holding, as you guys can see, indicated by this trend line. So Exxon, I'm going to put a price target, or an alert rather. I want to get in, let's just say we'll put a nice clean number, $50. I want to see the break above $50, so I'm going to create an alert. If it breaks above, let's just say 50.20, right where it's at. Once it breaks that point, I'm going to get alerted. I'm going to be like, okay, this is a good break. Bulls are going to start coming in here most likely. I'm going to watch and see if that actually happens. And then we could end up seeing the push back up to maybe test the mid-50s once again, which is a profit potential of around 10% here on Exxon Mobil. And the last one that I want to talk about, last stock today, is MasterCard, ticker symbol MA. This one's looking very, very strong for a swing trade. We held the higher low at 280, 285, right? We held that 180 SMA. We took out 300 today, which was a very, very strong resistance. So kudos to the bulls there. We took out 300, and now we're struggling under 307, 308, which is expected as the stock has rallied quite a bit. It's currently up 2.13%. So watch and see what it does at about 300 tomorrow. That's kind of what I'm waiting for. I'm looking to pick up some shares between 298 to 300 if we're really getting into the nitty-gritty numbers there. So I'm watching MA from about that point, 300-ish, back up to 310. That's kind of where I see it going in the short term. And if we're looking at the next resistance, if we break 308, 310, we might be going up to about $315 per share, right? Which from 300 to 315, that's about a 5% potential for profit. So overall, guys, those are the main stocks that I'm watching. And now with 12 minutes left in the market, before we wrap up this video, let's see what we're up to. Okay, so the S&P is still fiddling around 3120. Again, this goes to show how strong 3120 is. It seems like we tested it about 10 minutes ago. We failed to break out. Now we're looking to maybe break out of 3120 again. We're at around 3115. So watch that level here for the bulls. If we close above it, that's good. If we close under it, that's not too good, but yet again, the uptrend is still intact as long as we, pretty much hold 3,100 and quite honestly 3080. So as long as we hold 3080, the uptrend is intact here on the S&P. Dow Jones, you guys can see it's closing on a bit of a downswing, but still looking on the 5-day, 5-minute, the uptrend is intact. Same exact thing for the Nasdaq, looking to close up 1.3% today, up about 130 points. So overall, guys, that's it for the market. If you or the video market update, trading update, news update. If you guys enjoyed it, as always, hit that like button for me. Consider subscribing to the channel, and don't forget to claim your 2 free stocks from Webull, linked down below in the description box. They're valued up to $1,400. All you have to do is put in $100 into the account, and that's when you get the 2 free stocks. After about 7 to 10 days it takes for them to settle, and you'll get the 2 free stocks, and that does actually support me and the channel in general. So if you guys do appreciate all the free content, that's kind of a way you could repay me, and I do really appreciate you guys as always for all the support. And I'll catch you all in the next video. Stay safe out there, keep crushing the markets. It's a roller coaster ride we're in right now, but yeah, hope you guys are doing well. Stay safe. Peace out.